of Richmond Brothers, Matt Curfman. Matt, good to see you again.
Hi Bart, good to see you.
Yeah.
Uh-oh.
Oh my gosh.
Causing chaos. Here we go. Can I ring it now?
It is. I think
go.
it's Pandemonium Day. It is. It is Pandemonium Day at
There we
JTV.
go.
Perfect. Well, we had a chance to see you a few times here on JTV over the last few weeks with the ribbon cutting and grand opening of the Jackson YMCA. You, as our viewers know, were part of the team that got this thing off the ground and carried it through to completion. Congratulations.
Thank you.
Must be really happy with how it all turned out.
It's interesting to just think back on all the memories about the time and how great the community supported that project even through the pandemic and all the uncertainties around where spending could go and helping nonprofit causes in the community. So very powerful. And yeah, they had the ribbon cutting June, I think it was 24th. And 26th, and reopened the facility like kind of in its full swing. So I've been down there a handful of times working out and taking some tours, and very excited to see it.
Well, if you go to the Y, you'll see the main hallway is named in honor of Richmond Brothers and your family, and I thought this would be a good idea and a good time to talk about Richmond Brothers. Maybe this is this first introduction to the firm through the Y. Tell us a little bit about what Richmond Brothers is and who you are.
Sure, so thank you. So Richmond Brothers, we are a financial firm, so we deal with people who are kind of leading up to, in, or already in retirement. We are locally based here in Jackson, Michigan. In fact, we opened our doors.
Something else drop? Oh, it's your phone this time.
Chaos, sorry.
Pandemonium Day today on JTV. I'll drop something next.
All right, I'll wait for you because I've got two things already.
All right.
So we're retirement advisors, and so whether you around the Jackson area kind of work at, big names would be Consumers Energy, Henry Ford Allegiance, or really anywhere else where you've been setting aside money for future years, retirement, and you've built up assets in 401ks, maybe 403bs, IRAs, Roth IRAs. As you get ready for retirement, we help you in all that planning and help you make that transition, and then try to help create income streams from that money, especially for those that need it to supplement Social Security and other things.
And I think a lot of the question is when. And it's not how much or how long, or it's when, and that really it's based on how much, isn't it?
Yeah, and I think, people say, well, what's the magic number? What do I need in retirement? Do I need 500 grand? Do I need $1 million? Do I need 5 million? It's a really big question. You can Google it and the answer is all over the place, but it really comes down to how much do you need to live on? What is your comfort level? And everyone has different lifestyles. And so we just like to work backwards from that number and then complement your Social Security. Maybe you're fortunate enough, one of those few that have a monthly pension in addition to your Social Security, and you have a portfolio. Very few people have pensions nowadays.
Yeah, I have a brother-in-law who recently retired, and if we're out, he doesn't reach for his wallet. He just says, I'm on FI, fixed income.
Fixed income.
Yeah. So that's his excuse not to pay for anything.
So you have to pay since you're still working?
Yeah, isn't that awful?
Interesting little trick there.
It is. Try it yourself. It works. All right, the big, beautiful bill. We all know about it, but it's like 8,000 pages long.
Yeah.
No one's read it.
Yeah.
And every day we're hearing things that are coming out that are in that bill that people have no idea about.
Sure.
Which is kind of scary. But should those that are retiring or recently retired be concerned about what's in that bill?
So, great question. It is a lot of change. And just for a little bit of pretext to all of this, so the current income tax rates were set to expire at the end of this year, December 31st. And the current tax code that we have was actually set in place when President Trump was president before. And so they were always set to sunset this year. And so the passage of this bill really tied very heavily into, if nothing was passed, we were going to go back to tax rates what they were when they were higher. So that was kind of the foundation of why this bill was looked at in this year. As an individual, as a retiree or near retiree, someone approaching it, we don't think you should have a lot of concern, but you should be really aware. So in general, tax rates are going to stay lower. They're not going to revert to higher. Standard deductions for a married couple are still really high. And there was a lot of talk about what's going to happen with taxation of Social Security. And in this case specifically, it's a little more of a gray area. So you see letters coming out from the Social Security Administration saying, oh, most retirees will now get Social Security tax-free. Well, there's always an exception, and there's always some gray area. Mm-hmm. So what they did in this bill with respect to Social Security and taxation is they added an extra, I'll just say an extra standard deduction on top of the standard deduction for those who are 65 or older. So what it does is, let's just say, for example, the married filing joint standard deduction is $30,000. If you have 100 grand of income and you deduct 30 grand, you're only taxed on 70. So they added an extra, let's say $6,000 standard deduction for those 65 and older. So then you cut another 6 grand off. So you have less and less taxable income, but that doesn't mean that your Social Security is not taxed. And you know this, you can draw Social Security anywhere between 62 and 70. What about the people between 62 and 64 that turn on their Social Security? So it's not perfect, it's not black and white, but in general, I think from an individual standpoint, I think we can expect to continue in the near term. I'll say near term very specifically because I want to talk about that in a minute, but to have lower individual income tax rates. So that's actually a benefit for, I think, a lot of individuals and retirees. I will put the caveat out there that doesn't solve our long-term issues in this country.
And we've got other credits, other tax credits, child care, or child tax credit, estate gift tax.
Yeah, so there is, $6,000 bonus deduction for those, that's the extra that they basically added on top of the standard I was talking about. Estate and gift tax exemption. So if you're a married couple, you'll now be able to have $30 million in your estate before you owe what I call death tax. That's the estate tax, it's tax for dying. That's $30 million is the amount you're not taxed on. So that passes through. If you have $35 million, the $5 million is taxed. Oh. So there's federal and state death tax. So that actually doesn't impact almost anyone, but it's good because years ago, the exemption was only $1 million, not $30 million. So that's good. And then, like you said, there's some child tax care credits and a few other things. So there are definitely some positive things. Our concern is the average retiree will be retired between 20 and 30 years. And it doesn't matter who's in the White House, so this is not a political statement, but we spend more than we make. We bring in so much revenue, we spend this much, the deficit rises. Even with this bill, the Congressional Budget Office put out, it's estimated over the next 10 years, the deficit will rise by $3.4 trillion from this bill. And the deficit is currently, if you go to the US nationaldebtclock.org, nearly $37 trillion. So I mean, we really approach $40 trillion with this bill. So taxes are staying lower, but there needs to be a solution for higher revenue, which we believe ultimately will be higher taxes.
We're just kicking the can down the road.
It seems that way. So within a retiree or near retiree, one topic we really help people on is how do you lower your income tax rate through retirement? And how do you do it so that maybe you choose to pay a little more tax now while rates are lower, and then save yourself 10 to 20 years from now if the deficit spending keeps up and we eventually get an administration that jacks tax rates much higher, you don't have any control. And by then, most retirees will be over 75 years old. Whether they need it or not, they'll be forced to take required minimum distributions out of their retirement accounts and pay tax at whatever the rate is then, not today. So if you think about that, we know the rates today, it just got extended.
Yeah.
If you're retired, you probably know we can help you do an inventory of all of your resources and income sources, and then help you also create an income plan that solves for what's your tax bill going to be. And the less tax you pay, the more you keep in your portfolio. We're kind of throwing it on its head and saying, what if we choose to pay a little more tax now and getting some of your assets into future tax-free accounts? Government will never stop you from doing that because you're choosing to pay a little more tax now before you have to. They love you for it.
Yeah, it's your money. I mean, at that point, you've had it. It's like, it's as if it was, sitting in a box under your bed.
Yeah, and a simple example for all of your viewers, let's say you were really diligent and you set aside a good amount of money and you worked for 35 years and you put $1 million in your 401k or your IRAs or Roths. Well, if it's in a pre-tax 401k, that $1 million is not yours.
Yeah.
You take it all out, you're going to tax on all of it. So I think it's fair to say 600 to 700 grand is probably yours.
Oh.
So how do you get more of that into your pocket over the next 20 or 30 years of your retirement?
All right, how about business owners? What do we have in that big, beautiful bill?
Yeah, couple of things. So qualified business income deduction. So again, just offsets for those that are self-employed or own businesses, and there are income phase outs. So if you're a ultra successful business owner and your income is really high, these won't apply to you. Bonus depreciation. If you buy something, a capital asset, put it into service, bonus depreciation is you can deduct the full value that year. Obviously, these are good things to bring up with your CPAs and your accountants if you are a business owner. But again, I think some very creative use of the tax code that can help smaller businesses and those who are self-employed. So there are definitely some benefits in the code. We're just still concerned about long-term spending and deficits.
Yeah, and that provision is to encourage people to buy equipment.
Yep, and put it into use. And
Yeah.
there, you probably saw this too. There's some other where if, and I don't have all the intricacies of this part, but if you were to buy a new vehicle, that the final stages of that vehicle, and you can look up the actual language, were completed in the U.S. and it's a U.S. made vehicle, and you borrow money to do it, there's now a provision that if your income's under a certain level, you can deduct the interest on your car loan. So again, trying to promote America. So there are some positives. It's just the spending part and long term. At some point, we'll have to pay the piper.
Yeah, it
like
should make.
some point the credit card bill will come due.
Yeah, it should make everyone nervous because it's us. It's our country.
Yeah.
Yeah. All right. So one thing that you folks do is educate your clients in the community.
Yeah.
And I think you've got an event coming up at JC.
Yeah, so thanks for bringing that up. So actually next Tuesday, July, we're in July 22nd. For those of you who are not already familiar with Richmond Brothers, if you say, hey, these are interesting topics, I want to learn a little bit more, every now and then we just put out an educational event. We do a lot of the content we talk about today, we've already sent out to our clients. So this is really for those who are not already familiar with us and just want to kind of maybe meet us or get engaged and have an opportunity to even jump on the phone for 20 minutes if you have more personal questions. You can just go to richmondbrothers.com/events and sign up, or we have a very simple email, questions@richmondbrothers.com. And so if you want to jump on the phone with our team and go through any of your specific circumstances, we would be honored to do it. We are a local firm. We've been in Jackson working this way since August of '94, believe it or not.
Wow.
And I joined John and Dave Richmond, who you know, back in my senior year, which was '97, '98, from Vandercook Lake High School.
So you were there at the very beginning, brand new.
In the early days.
Yeah,
in the
you were in a
early
little
days.
office off M60 on
Spring Arbor
Foxway
Road.
or something.
Yes, well, we had Spring Arbor Road first,
Oh, yeah.
which is now where the Henry Ford Allegiance Center is, and then for 20 years we were out in Napoleon.
So you're coming up on your 30th anniversary with the firm.
So we actually just passed the 30th last year. Yeah.
30
Coming up
years.
on 31.
Wow.
Yep.
That's awesome.
Yeah, it's pretty incredible, and there's a lot of great people here in Jackson, and the community's been good to us, and we want to stay here and keep helping support those. And the critical years we think in retirement planning are in the 5 years leading up to when you retire, and the first 5 years of retirement. So if you want a second opinion or free analysis, we don't have hourly fees. Just give us a call, and we'll see if we can help.
Nice. Yeah, I remember you were coming around sweeping the office while still a kid in high school.
Yeah. Filing paper statements back then, actually,
Wow.
in actual file cabinets.
Well, it's always great to see you, Matt. Thanks for coming on the show today.
Appreciate it. Thank you, Bart. I'm not going to
You
knock
bet.
anything else.
All right,
Promise.
nothing else to knock. We got it all on the floor on Pandemonium Day. The CEO and co-owner of Richmond Brothers, Matt Curfman.